So a little over a month ago, I covered HIMS and HERS stock, and I told investors I liked the long-term opportunity, and I rated that stock a buy on August 5th, 2025. Well, in the last month, HIMS and HERS stock is up almost 30%, and that warranted me revisiting this company now and updating my buy, hold, or sell recommendation, which is what I'll do in this video. I'll answer if I think HIMS and HERS stock is a buy at current market prices. Let's jump in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so here I have my spreadsheet here where I keep track of all of my buy, hold, or sell recommendations, and I share them with you transparently so you can see my recommendations, my ratings, and how they've worked out over time. So HIMS and HERS, you can see here, rated as a buy on August 5th, 2025. And in the last month here, HIMS and HERS stock is up over 29% in that time. So let's take a look at the company and see if it's still a buy at these higher valuations. So one of the things I've liked about HIMS and HERS stock is the phenomenal revenue growth. Even before the weight loss treatments, the company was growing revenue and customers significantly. From 2020 to 2025, its revenue has increased from 100 million up to 2 billion in that time. That's good for a compounded annual growth rate of 79%. In recent quarters, the management team informed investors that it's still growing, even if you exclude the weight loss treatments, right? Because the weight loss treatments are volatile right now. The compounders are not supposed to be able to still be selling these versions in the marketplace, according to Novo Nordisk, which has opened claims against HIMS and HERS. Remember in that famous breakup a few months ago, Novo Nordisk and HIMS and HERS, and Novo Nordisk was blaming HIMS and HERS for selling basically copycat versions of the weight loss treatments that it wasn't supposed to be selling. So that's up in the air and uncertain. So it's encouraging for HIMS and HERS investors that the management team keeps reporting to investors and telling us that, look, even without the weight loss treatments, our revenue and customer growth is still increasing. Furthermore, the company is improving its margins combined with very strong revenue growth. 6.5% operating profit margin in the trailing 12-month period. That's up from negative 39% in 2021. One of the company's largest expense is sales and marketing, and sales and marketing or advertising is very, very sensitive to economies and scale. So the larger a company becomes, the better it can invest in advertising at a better cost per acquisition or customer acquisition cost compared to long-term value. So this is a category that's benefited by scale, and HIMS and HERS is scaling nicely. If it continues this trend, that advertising expense, that marketing expense will continue to become lower as a percentage of overall spending. Furthermore, the company is investing in expanding its manufacturing capabilities. Again, a category that's sensitive to economies and scale. As it becomes larger, it can produce at a lower cost per unit and thereby further improving the company's margins. Those two catalysts are likely to continue improving HIMS and HERS profit margins. And already, it's demonstrated phenomenal improvement in its returns on invested capital. 43.3% in the most recent trailing 12-month period. That's great. Even if it stops increasing from this level, it's a really strong ROIC, and compared to its weighted average cost of capital, it's over 3-to-1 ratio, which is phenomenal. I like to look for companies that have a over 1-to-1 ratio, ROIC to WACC. HIMS and HERS is well above that in comfortably strong territory. Speaking of the company's weighted average cost of capital, as a part of my discounted cash flow valuation models, I calculate a weighted average cost of capital. For HIMS and HERS, it's relatively high at 15.4%, but it's still significantly below the ROIC, which is above 40%. So clearly well above 2-to-1 ratio for HIMS and HERS. However, the intrinsic value per share, which I updated this morning, came in at $45.81. The current market price, after soaring by over 25% in the last month, is now $57.70. So even after applying a margin of safety, the stock is now approaching expensive territory or overvalued territory. Furthermore, when I look at this business on a forward price to earnings basis, it's now trading at a forward PE of 79, which is significantly above where it was around May when it was trading at a forward price to earnings closer to 30. This has been a volatile stock. You can see the valuation has fluctuated. It started the year trading at a forward PE of less than 50, then soared to close to 125, then came crashing down to 30, now back up to 80. And this has warranted me changing my recommendation on HIMS and her stock multiple times this year. When the valuation has gotten cheap, I've upgraded it to a buy. When the valuation had gotten expensive, I downgraded it to a hold. And so far, the ratings and the changes have worked out relatively well. Doesn't mean they're going to continue working out well in the future, but so far, the ratings and changes I've been instituting with HIMS and her stock have been working well. So in that regard, I had the stock rated as a buy a little over a month ago on August 5th, and the valuation has increased substantially. So today I'm downgrading the stock to a hold, and I'm updating that September 22nd, 2025. It's a great company with excellent growth rates, great returns on invested capital, but the valuation is getting expensive, especially with the risks compared to as it relates to the weight loss treatments. I would wait for a better price, a better entry point for HIMS and her stock.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.